The world is starting to realize that we've got a massive energy crisis on our hands. Fuel prices already super high are set to rise further. Even Elon Musk, who of course wants sustainable green energy, says that we need to produce more oil. He says extraordinary times calls for extraordinary measures. America needs to see what it can do to produce more oil and gas. Right now, with Europe, it's buying its oil and gas off Russia. In fact, some people are saying that the war is paid for by the Americans and the Europeans by buying the gas and the oil off Russia. Can that be turned around? Well, the only way it can be turned around is if the rest of the world produces more oil and gas. Right now, Saudi says that it's not willing to do so. At least that was its initial reaction. Will it change its mind as the world enters a phase of very, very high inflation and a situation where commodity prices are high? Coal has gone up by 80%. Aluminium is at record highs. We're seeing shortages, and of course those shortages are going to continue. If you've invested in the oil companies, if you'd invested in the commodity companies, then right now you'd expect their share prices to be increasing. But always talk to a financial advisor before you decide to invest. It's certainly a world that is changing fast, and that's why it's important to review your investments and make sure you're in the right area. As somebody said, you don't shut Russia, the second largest producer of commodities in the world, down and then expect there not to be shortages and an issue. I'll put out information on what you need to do and what's going on in the world. Please hit subscribe, hit that notification button, please like, please share the video so I can get out more information on what's going on around the world. Right now, it's higher inflation, higher energy costs, and expect that to cause, of course, stagflation in the world. In other words, economies flatlining with inflation, with governments seeking to look for solutions and be more effective.